Now, staying in Hong Kong, a recent report by Data Explorers shows that short selling has risen to the highest level since September of 2010, as concerns of slowing Chinese growth and further monetary policy tightening intensify. Let's more about that now with John Tang, the China strategist at UBS. Thanks for coming in this morning.
My pleasure, sir.
Short selling is one of these bandied around words that many say shouldn't happen, should happen. How is it affecting stocks in China?
I think that short selling, of course, is healthy on one side, but on the other side, short sellers should know about what's going on now, and more importantly, what's going on will go on in the future. I think that now it's there should be still some downside for the stock market. On one side, we are looking for bad numbers, potentially bad numbers for today and the next couple of days. On the other side, I think June's numbers could become uglier. I think that people need to see the potential peak of the inflation before they can be more comfortable to come back to the market.
When do you at UBS see that peak happening?
We are looking for the peak in June, but no one knows until the time comes.
That's right. Now, you've got some comments in your research. Chinese equities are not expensive. We don't see earnings downgrades that are significant, and we believe that the situation will improve in the second half of this year with lower inflation pressure, etc. But you did point out June is going to be pretty brutal. Higher inflation, liquidity is tightening, worsening power shortages. So it's a sort of, you win on one hand and you lose for June.
Overall, it's like this. For the 12 months from now, we are still positive about the Chinese equities. The current situation, the comforting side, I think that now it's a good time to talk about some comforting side, is that on the one side, earnings are still quite defensive because the non-cyclical nature of the H-share compound compared to the A-share. On the other side, the valuation looks actually already been quite attractive. Finally, there's one thing we need to bear in mind. This time, what has happened, the problem in China is not a demand problem. It's a supply disruption problem. And more importantly, it's a policy mistake. It's relatively easy to correct. So with all these in mind, we're starting from April, we have talked about the market down in May and June, and that's mainly because of all these inflation, the slowdown of the production, a lot of the headwinds that we're now seeing. So I think the headwinds are still going to last for some time, but on the other side, we should not lose hope.
They usually say sell in May and go away. Do you say sell in June and stay away?
I would say that if you didn't sell in May and in June, it's actually time to hold. If a fund manager still don't accumulate enough cash, I think that he may sell a little bit more.
So overall, you're quite bullish on China stocks, but just caveat emptor, be right.
In the current moment, after the market has declined so much, I think that people need to be a little bit more positive, looking at the positive side of it. It's not a bear market. I just want to repeat, it's not a bear market. I will buy when some other people is talking about the bear market and when the inflation seems to be able to peak.
I've got to ask you about interest rate rises. Everyone predicts the PBC to raise rates. They never get it right because it's almost impossible to gauge it. The long weekend, dragon boat, what's going to happen then? It didn't happen. So what's your UBS take on it, or is it relevant to investing?
Right. For the interest rates, we look for one interest rate hike in the next month or two, and maybe another hike somewhere in the third quarter. There will be a continued interest rate hikes. On the other side, when people saying that the interest rate hike is going to be hiked in the weekend, generally they will feel disappointed because I think the central regulators don't want to be caught of those information. That said, eventually, to your question, I think that it is relevant, but it's not that critical. At the end of the day, it's the corporate earnings which is the most important. And now the negative real interest rate is still there, which is actually still pretty significant.
Positive. John Tang from UBS. Many thanks indeed for coming in and talking to us today about that.